are you?
Hi, how are you?
I'm fine, thank you.
Excellent.
So grab your mug, let's have a conversation.
Grab your mug and let's have a conversation.
Hello and welcome to this episode of Grab Your Mug. My name is Salam Elea, Human Resource Officer here at Ichiban Tax, and I'm going to be having a discussion with Robert Waruiru, who's our Managing Partner and Tax Lead at Ichiban. So stick around, grab your mug, let's get into it. All right, so Bob, let's start by a definition of what eTIMS is and who uses it.
Well, eTIMS is KRA's solution to visibility of transactions, and essentially it's an electronic tax invoice management system. It's a system which requires anybody who is in business to pass their transactions through this electronic tax invoice management system, essentially allowing Revenue Authority visibility of all your business transactions for purposes of determining your tax liability.
Okay. Yeah. And how does eTIMS impact our deductible expenses as businesses?
Yeah, that's a very good question, because you see, the law changed in 2023, it's effective 1st January 2024, and the import of that change is that if you do not have an eTIMS invoice to support your expense, that expense is not allowable for tax purposes.
Okay.
And it's important to state here that when you're determining your tax liability, one starts with your income less expenses, so that you get your profit, which is then what is subjected to tax. So these expenses have to be supported by an eTIMS invoice. And if you look at countries like, for example, Rwanda, which went ahead of us in terms of the eTIMS equivalent, it was of course designed as a VAT solution. But if you look at the impact in terms of revenue, actually it's driven more corporate income tax revenue than VAT. And the whole idea is just visibility of the transaction. So a lot more people are now known to the Revenue Authority. So a lot more people are filing, and they are filing the correct returns.
Okay. Looking at the landscape in Kenya and the businesses and how we operate, I mean, the Kenyan people we know them, we know our people. What problems are businesses now facing with eTIMS? You've said we are now required to transact with people who have eTIMS. So does everyone have eTIMS? What is the uptake of that? And what problems are businesses now facing?
Actually, that's a very good question, because from an uptake perspective, it's not as high as probably Revenue Authority would have wanted. The last I checked, we were at about 30-40%, which means 4 out of every 10 people are eTIMS registered. Okay. And that obviously presents a problem when it comes to deductibility of expenses, because so many people are not eTIMS registered. Yeah. But another problem that is prevalent in any country that has tried to use this system is internet connectivity. Because you see, you are issuing the invoices and then they are being transmitted. So if you don't have internet connectivity, then there are those gaps, and then you start having Revenue Authority saying we cannot see these transactions. Have you actually made a sale, or that kind of a thing? Okay. Again, also, I think there's an element of the complexity. If you consider some of our businesses, we're talking about mama mbogas. Not everybody has got a phone that has got access to internet. Yes. The complexity of raising the invoices. Of course, the Revenue Authority has tried to make it easy on eCitizen, but it's still a challenge. So I actually foresee a significant challenge when people are filing their 2025 tax returns, as KRA tries to validate those expenses. Okay. And what are the penalties for non-compliance? Yeah, it's a big one. Section 86A of the Tax Procedures Act imposes a penalty of twice the tax. Wow! So if I'm selling you a good, or if I'm selling you this cup for say 1,000 shillings and the VAT is 160, and I don't issue an invoice on that, then the penalty is twice the tax involved. So it's quite steep. Okay. Yeah.
All right. Well, that's all we had for today. Thank you for joining us on Grab Your Mug, and we will see you next time. Adieu.